Hi Graham, welcome on Blockchain Rock. Thank you
Nice to
so
meet you.
much for coming on the show. You're working for Archax. You're very heavily involved in blockchain and fintech products. So as usual on Blockchain Rock, we'd like to start with you giving us a little insight into your background, how your story so far. How did you get involved in fintech, and perhaps a little bit about Archax and what you're offering.
Sure.
So
Yeah, no
yours.
problem. So I'm the CEO and co-founder of Archax. We set up about 2 years ago. Prior to that, I spent the last 20 years working in hedge funds. So I was most recently the Chief Operating Officer, Chief Compliance Officer of a fund called Omni Partners in London. We managed about 1.3 billion across different strategies over time, event-driven, macro, secured lending. So great hedge fund to be at. And my background really was always in asset management and institutions. And really, I've always kind of been interested in fintech and never really taken that leap away, I guess, from a kind of stable salary and a secure environment. And then in 2013, the CTO of Omni kind of said to me, would you be interested in buying some Bitcoin? And I said, well, yeah, sure, sounds interesting. And, we got involved and we started to outperform our fund managers, which obviously made us laugh quite a lot. Look, guys, hey, look how well we're doing. And we'd have these arguments about what is money, is this really an asset or not? And, and they probably won a lot of the arguments in the early days.
So you purchased it as an asset, as an investment into an asset, as part of your asset management?
No, just personally.
Personally.
So personally, we were like, hey guys, you're up 7% a year, I'm up, 47% or even more even. But, it's quite a fun way to get into it and getting interested. And whenever you invest anything in something, you start to take a bit more interest, you pay more attention to the press and things moving. And it became apparent throughout that period to 2017, let's say, that something big was happening, it started taking off. And in 2017, when all of the institutions started to talk about should they get involved, should they not get involved, we kind of felt, well, it's not that they don't want to get involved, it's that they don't really have credible counterparties to work with. So we decided, look, let's explore launching a fund at Omni. We put together the fund and we put together the team, and we had a great institutional team at Omni, but the problem was you couldn't really hand on heart launch a fund and say it was institutional quality. The infrastructure just wasn't there to support it. So with that in mind, myself, the CFO and the CTO decided to leave and form Archax. So that was in February of 18. And the idea really was, let's build an exchange that if institutions want access to digital assets, they can come and register and be part of the ecosystem. So we started off on that journey with a view at the start. Let's not touch utility tokens, but let's work with cryptocurrencies and let's work with regulated securities or digital securities. But feedback quite early on from a lot of the big banks and institutions was, if you touch cryptocurrencies, you're still going to kind of be affected by the reputation of the utility token world. If you're only touching regulated securities, it makes you much more credible.
Such limitation being, for example, lack of confidence on the part of the institution, lack of regulation.
Well, I think all of those things. I think. Well, certainly public perception plays into it. So, I mean, even now it's quite hard to, for every. I mean, the ratio's probably got better, but for every positive piece on crypto, there's probably a few negative pieces, negative people going around. Especially if you include all of the ICO scam wording that's included. And as soon as you start talking about Bitcoin, Ethereum, you kind of get caught up in that world. Whereas if you can focus on regulated securities, then it's much more positive. So. And then you're right as well. The lack of regulation, the lack of clarity, and that's all improving somewhat, but we're still some ways behind. So we decided pretty early on that let's focus on regulated securities. So with that in mind, we kind of asked ourselves, what does it look like to be the most credible place that someone can face? So we put together a good team. We decided to be based in London. We've applied to the FCA for our regulation, and we're hoping to be the first regulated digital securities exchange in the UK.
Congratulations! Amazing.
Thank you.
So another aspect that we discussed a few times on Blockchain Rock is the fact that part of this perception as to the cryptocurrency world, and Bitcoin, with respect to scammers, and is justified, but a large part of it is actually not justified. A lot of companies failed after the bubble, in 2017.
Yeah.
Also due to the lack of experience, and we believe that regulating the space, therefore requiring companies that intend to offer a blockchain-based product, and requiring them to meet certain standards will help those companies understanding whether they're prepared to actually undertake all of these, to welcome this investment and to undertake and to offer what they're actually saying they would offer. So could you share your idea as to
Yeah, so I think the FCA at the start of this year, they released their consultation paper, which kind of split blockchain products into three areas, which is kind of similar to how we think. I think they might have retermed it now, but it was called exchange tokens, which is kind of Bitcoin's utility tokens, where the token represents a good or service underneath, and then finally regulated securities. And that area, for sure, in the regulated securities area, you should expect the same level of control and oversight that you'd expect from any traditional security. So in that way, the FCA or any regulator really should try and be as technology agnostic as possible.
Yeah.
So our view is that all we're really doing at Archax is changing the technology on which the rails for securities are built. That's kind of it, And when doing that, the advantages of blockchain mean that hopefully you open up this to a global world and to projects that otherwise didn't have access to capital markets. So that's kind of our focus. But outside of that, cryptocurrencies and utility tokens are obviously built on blockchain technology as well. And obviously, if you can build anything on technology, then you're going to get scams, you're going to get good projects, you're going to get bad projects. So regulation just means that you've got a level of comfort over those projects. When it comes to utility tokens, you've kind of got two problems really. Firstly, you've got the lack of regulation. So you don't really know whether everyone's a good actor in the space or not. And when people were raising money in 2017, that was attractive to a lot of people. A lot of people went out and started considering how could they do a token, how can we raise money? And some of those are with good intentions, a new capital raising way of raising money for your entity, selling a future good or service without necessarily giving away any equity. I mean, hugely attractive. The problem is that because it's not regulated, you don't have any comfort. And secondly, what are investors buying? It was always a bit unclear. If you're not linked to profits, if you've got no share of the company, what's that service really worth in the future? Value in those utility tokens, value in the network effect is quite hard, especially in early stage companies. So, someone just losing their money on a bad investment isn't necessarily a scam. The fact they invested in something which had no clear equity or debt underpinning it is one of the issues.
It's just a bad investment.
It's just a bad investment. It's just giving money to your mate. He says, look, I'm going to open a coffee shop. You can buy the rights to coffee in the future, but you're going to own nothing, and you're great. And you're sitting there like, what's my future coffee worth? It's very hard to justify what people are going to pay for it. And what was really happening there is like, I'll sell you that coffee for 5p, and then you're out there going, well, someone will pay £3 for a coffee, so I can, make 60x, rather than actually I want the coffee. It's a very different way of thinking, and that's part of the reason. But there are no doubt there were people that were creating scams. But
for sure.
They too will exist in the regulated world as well. Cryptocurrencies are a bit different. I think. There are obviously some Bitcoin evangelical people out there. We try not to be too much like that in our thinking, but appreciate that, if the world can go towards a decentralized model in a controlled way, perhaps that's advantageous. So, we're trying to build our exchange to be as familiar possible to traditional investors, traditional players, but consider where we can make blockchain use. So, post-trade settlement, we're going to use blockchain because it's much more efficient. In the future, we'd like to have delivery versus payment directly on the blockchain, but we'll have to wait until the technology is capable of the frequency we think is needed.
Everyone, when most people speak about blockchain, they refer to the Bitcoin model. So, but in reality, you can tailor your blockchain based on your needs, centralized, decentralized. You might defeat some of the benefits for which people look at blockchain or distributed ledger technology, but you can definitely custom tailor it to the needs of your specific customer.
Exactly. I think on that as well, because we are a centralized exchange. I mean, there's kind of no getting away from it. But it's really hard to be a decentralized exchange in a regulated way. If I think of two anonymous participants coming together and trading with each other, the problem you've got if you're an institution and you're one of those participants, okay, you might not mind the fact that you can trade, but you need to know who's the opposite side of that transaction. It could be a PEP, it could be someone from a sanctioned jurisdiction.
Exactly, It opens the door to a lot of issues, as you say, in terms of terrorist financing. And first of all, it makes compliance impossible by the point of view of the business. So I agree with you.
So this kind of, and I don't know if this is the right term necessarily, but this kind of data sovereignty, where someone owns their own data, and then independent companies can sign off it. So I know BlockPass are doing this sort of thing, certainly with individuals on KYC ML. If you had a trusted central body who could kind of stamp your blockchain participation and go, right, this guy's been approved, and stamp someone else saying that's been approved as well, then those two people could come together with independent authorization. But you've still got that central central body approving people's
Which
status.
is an assurance, really, because you need to regulate someone.
Exactly.
You need someone to be subject to standards, and
it's quite hard to get away from it altogether until we get to the point where technology truly can make that assessment. It's quite hard, but it's quite exciting that maybe it could get there, but we need to get there in a measured way. And I think turning up at an institution's doorstep and going, hey, we're an institutional exchange, you don't know who you're trading with, we're based in a jurisdiction with no regulation, please sign up. They're all going to have a problem with that. So I think regulation is important, and everyone should look to move towards the ideal model in a measured way.
I see. And to close the interview, if that's fine for you,
Sure.
what's next for Archax? What is the next goal? What is the next step?
Yeah, so we're still. So we put our regulatory application in March of this year. So we're speaking to the FCA. Great conversations. Hopefully we'll be successful. But they've got to assess us based on our ability to perform the exchange. We were out there raising money. Coincidentally, with TriTech being launched today, it looks like we might have secured a decent chunk of our raise from Israel. So quite excited about that partnership. And then we're looking to do something quite exciting in Gibraltar as well. So potentially it could be could be an interesting future for Archax.
Graham, thanks a lot again for coming on Blockchain Rock. It was a pleasure meeting you, and thanks for chatting with us.
Thanks very much.